The true bull market may finally wake up. Since the start of the bull market in October 2022, stocks move higher has largely been about artificial intelligence and the outperformance of a few large equities, driving investors concerned that gains aren't well spread enough for the rally to continue. That could be changing. Thursday's better than expected inflation reading has sent the stock market into a tizzy in recent trading days, as investors have rapidly priced in higher chances of an interest rate cut from the Federal Reserve in September. The most loved areas of the market of the past year have underperformed as investors rotate into sectors outside of tech. The Round Hill Magnificent 7 ETF, which tracks the group of large tech stocks that led the 2023 stock market rally, is down more than 1.5% in the past 5 days. Meanwhile, real estate and financials, both interest rate sensitive sectors, have been the market's biggest winners over the same time period. The small cap Russell 2000 index is up more than 7% and finally reached its 2022 high for the first time during the current bull market. In another sign that a wide swath of stocks are rallying, the equal weight S&P 500, which ranks all stocks in the index equally and isn't overly influenced by the size of the stocks moving higher or lower, has outperformed the traditional market cap weight S&P 500. Rithol's wealth management chief market strategist, Coley Cox, told Yahoo Finance the market action as of late has been refreshing and could be the sign of a maturing bull market where a wide range of stocks are contributing to the rally, providing more support for stocks indexes at record levels. If this trade continues, if the prospect of a rate cut is still in play for this fall, then we could finally see the bull wake up, and that's good news for all investors, Cox also added. It's not the first time strategists have been optimistic about market rotations like the one currently happening. Other spurts of widespread rallies were celebrated in December 2023 and during the first quarter of this year. The question is whether a big broadening of stock market gains is finally underway this time, or if this is yet another head fake as the market becomes overly optimistic about Fed rate cuts. The convictions level that we have is higher right now than back in December during the Fed people-driven market rally. Bank of America Securities Senior Equity Strategist Oh-Sung Kwon told Yahoo Finance. Kwon knows that the narrative driving the rally, hopes of a soft landing and a gradual interest rate cut from the Fed, is largely unchanged from the prior broadening spurt. But this time, he said, the earnings backdrop is really supporting this rotation as well. Bank of America earnings analyst shows the 493 stocks, not including the big tech Magnificent 7, are expected to grow earnings year over year for the first time since 2022 during the current reporting period. According to a chart from JP Morgan Asset Management Media Outlook, in June, the earnings growth of those stocks is expected to pick up in the coming quarters, while big tech is expected to see its earning growth slow down. Given that earnings are typically the key driver of stock prices, this would support the theory of a broadening rally. But the key caveat is that these are just expectations, and given the market struggle thus far this year to produce a wide array of winners, some strategists want to see actual earnings growth to confirm the narrative that's currently seen in the estimates. I want to see earnings growth come from more sectors than just tech, Cox said. I think that that's the big theme of this particular season. You know, seeing how many sectors can actually pitch in and move the S&P 500's profit expectations higher. The same could be said for the other narrative back in the recent rotation. Markets are now pricing in a more than 90% chance of Fed cuts interest rate in September per the CME Fed Watch 2. But again, Cox is wary of declaring the broadening will certainly continue. Until officially in that rate cut cycle, it's hard to say this broadening trade is here to stay, Cox said. I hope it is. I'm optimistic it is. But you're still going to have a market that's hanging on every piece of economic data that comes across the tape. Charles Schwab, senior investment strategist Kevin Gordon, is also cautious about declaring the big broadening has arrived. Gordon noted more clarity on the Fed's cutting cycle and why it would start cutting remains paramount, particularly for the most interest rate sensitive areas of the market like small caps. Gordon reasoned the recent market action has been a great step in the right direction, but a broad rally won't come overnight. Gordon said. He added, the nature has been for everybody to say that it's this great rotation, but great rotation tend to take a little bit longer than a couple of days. And even if that rotation slowly occurs, recent index performance shows that will mean a different, slower path higher for the S&P 500 too. The S&P 500 closed down last Thursday despite the release of a promising June inflation report as investors moved out of the large tech stocks, which hold bigger weight in the index than smaller stocks. We could see a little bit of this churn where some stocks are passing the baton to other stocks, Cox said. Tech stocks are passing the baton to other stocks. Sure, we may not see prices move up as quickly as we have, but this is the kind of movement that strengthens the foundation of a bull. It means that this rally can be stronger and live longer eventually.